Welcome to our discussion on investment strategies, where we dive into the world of stocks and cryptos. Today, we'll be exploring the exciting world of finance, comparing the long-term and short-term strategies of investing in stocks and cryptocurrencies. But before we delve into the details, let's make one thing clear. The content we provide here is for informational purposes only, and should not be taken as financial advice. Remember, we are not financial advisors, and it's crucial to do your own research before making any investment decisions. It's time to delve into the pros and cons of long-term and short-term investing. When we talk about investing, we often hear the terms long-term and short-term. But what do they mean? Let's break it down. Long-term investing is like running a marathon. You're in it for the long haul. It involves buying and holding assets, often for several years or even decades. The goal here is to build wealth gradually over time. The key advantage is potential high returns. Over time, the market tends to rise, and if you're patient, you can reap the rewards. However, it requires a significant time commitment and can tie up your money for long periods. And let's not forget, the risk factor is still present. Market downturns can diminish your returns or even lead to losses. On the other hand, short-term investing is more like a sprint. It's all about quick moves. These investors buy and sell assets within a short time frame, sometimes within a single day. The aim is to make quick profits from small price changes. Now, short-term investing can offer faster returns and more control over your investments. You're not waiting around for years to see results. But it's not all rosy. It's a high-stakes game that requires constant monitoring of the market and can lead to significant emotional stress. Plus, the potential for loss is much higher. So, which is better? Well, it depends. It depends on your financial goals, your risk tolerance, and your investment knowledge. Both strategies have their merits. Long-term investing can lead to substantial growth over time, but it requires patience and a tolerance for market volatility. Short-term investing can yield quick profits, but it requires a keen eye, a steady hand, and a strong stomach for risk. In the end, the choice between long-term and short-term investing comes down to personal preference and individual circumstances. It's essential to understand the benefits and drawbacks of each approach before deciding which path to tread. As we can see, both long-term and short-term investing have their unique advantages and challenges. Now, let's take a closer look at stocks, a classic choice for many investors. Stocks represent ownership in a company, and investing in stocks has historically been a primary way to build wealth. The value of your stock shares can rise and fall with the company's performance and market conditions, but over time, the trajectory has generally been upward. If you've got a long-term perspective, stocks can be a great way to ride the wave of economic progress and corporate profits. Not to mention there's the potential for dividends. Many companies distribute a portion of their profits back to shareholders in the form of dividends. If you're holding onto the stock, these dividends can provide a steady stream of income, in addition to the potential for capital gains. But what about the downsides? Well, market volatility is a significant one. Stock prices can fluctuate wildly in the short term, driven by factors ranging from economic indicators, corporate earnings reports, geopolitical events, and even investor sentiment. This can be nerve-wracking, especially if you're not used to seeing the value of your investments swing up and down. Another risk is company-specific. If the company whose stock you own performs poorly or goes bankrupt, you could lose a substantial portion, if not all, of your investment. This underscores the importance of diversification, or spreading your investments across a variety of companies and sectors to minimize risk. There's also the complexity factor. Investing in stocks isn't just about picking a company you like and buying shares. It requires understanding financial statements, market trends, and various investment strategies. This can be daunting for new investors, but with research and perhaps some guidance from a financial advisor, it's a skill that can be learned. While stocks have proven to be a reliable investment over the long term, they are not without their risks and potential downsides. But remember, whether you choose to invest in stocks, cryptos, or both, your investment decisions should always align with your financial goals, risk tolerance, and investment horizon. So do your homework, stay informed, and make smart, educated decisions. Moving on to cryptos, the new frontier of investing. Cryptocurrencies are digital or virtual currencies that use cryptography for security. They have no physical form, and they operate on technology called blockchain, which is a decentralized technology spread across many computers that manages and records transactions. The most appealing aspect of cryptocurrencies is their potential for high returns. For instance, Bitcoin, the first and most famous cryptocurrency, has seen astronomical growth since its inception in 2009. There are now thousands of different cryptocurrencies, each with their own unique features and uses. However, with great potential comes great volatility. The value of cryptocurrencies can fluctuate wildly in a short period of time. In January of 2018, Bitcoin's value dropped by 50% in just 1 month. This volatility can be a double-edged sword, offering the potential for high returns, but also significant losses. Another potential obstacle for cryptocurrencies is regulatory risk. While some countries have embraced cryptos, others have imposed strict regulations or outright bans. The regulatory landscape for cryptocurrencies is constantly evolving and can greatly impact their value. Finally, cryptocurrencies are at the cutting edge of technology, and as such they come with a certain degree of technological risk. While blockchain technology is secure, cryptocurrencies are still susceptible to hacking. In addition, the technology behind cryptocurrencies is complex and requires a certain level of technical knowledge to understand fully. Despite these risks, the world of cryptocurrencies is exciting and continually evolving. Technological advancements continue to push the boundaries of what is possible, and the potential for high returns can be alluring. However, it's important to remember that while cryptocurrencies can offer significant rewards, they also come with a high level of risk and uncertainty. It's always crucial to do your own research and understand what you're investing in before you dive in. Cryptos offer exciting opportunities, but they also come with a high level of risk and uncertainty. Now that we've examined both stocks and cryptos, it's time to put them side by side. Firstly, let's talk about risk tolerance. Stocks, with their long history and regulatory oversight, typically offer a more stable investment. Sure, there are ups and downs, but generally speaking, the stock market has shown consistent growth over the long term. This stability makes stocks more suitable for conservative investors or those looking for long-term growth. On the flip side, cryptos are the wild west of investing. With high volatility and less regulation, cryptos can yield high returns, but also significant losses. This high-risk, high-reward dynamic makes cryptos more appealing to risk-tolerant investors or those seeking short-term gains. Next, let's consider investment goals. If you're aiming for steady growth and perhaps a regular income through dividends, stocks are your go-to. They've been a cornerstone of retirement portfolios for decades, providing consistent, albeit slower, returns. Cryptos, however, are ideal for those chasing exponential growth. We've all heard the stories of early Bitcoin investors becoming millionaires overnight. But remember, cryptos don't provide dividends or regular income. Their value lies solely in their potential for massive price appreciation. Lastly, market knowledge plays a crucial role in choosing between stocks and cryptos. Understanding the stock market requires knowledge about industries, economies, and company fundamentals. It's a vast field of study, but there are plentiful resources available to help you. Cryptos, on the other hand, require a different kind of knowledge. You need to understand blockchain technology, tokenomics, and the specific use cases of different cryptos. While the learning curve may be steep, the crypto community is vibrant and supportive, offering many resources to help you navigate this new frontier. In conclusion, both stocks and cryptos have their place in an investor's portfolio. Stocks offer stability and consistent growth, ideal for long-term investing. Cryptos provide the potential for rapid growth, suited to risk-tolerant investors and short-term strategies. Your choice between the two will depend on your risk tolerance, investment goals, and market knowledge. Both stocks and cryptos have their place in an investor's portfolio, depending on their individual needs and risk tolerance. Let's wrap up our discussion on long-term versus short-term investing and stocks versus cryptos. We've taken a deep dive into the world of investing, breaking down the differences between long-term and short-term strategies. We've explored the traditional world of stocks, highlighting their stability and potential for steady growth over time. Then we've journeyed into the exciting frontier of cryptos, where volatility can mean high-risk, high-reward scenarios. Remember, stocks are the time-tested vehicles of investment, offering a sense of security and consistency. They're perfect for the long-term investor who values steady growth and dividend returns. On the other hand, cryptos, the new kids on the block, are highly volatile and can offer substantial returns in a short period. But they also come with a higher risk factor. But as we've emphasized throughout our discussion, every investment decision should be based on thorough research and understanding. Whether you're a seasoned investor or a newbie, it's crucial to understand the risks and potential rewards associated with each investment. And remember, we're not financial advisors, so always do your own research and consult a professional before making investment decisions. And the choice between long-term and short-term stocks and comes down to your personal financial goals, risk tolerance, and investment knowledge. Thanks for watching. If you found this video helpful, please like, comment, and subscribe. And don't forget to hit the bell notification so you'll get updates anytime we upload a new video.